Hey Team SoCal, happy Saturday everybody. It looks like, hopefully, well, usual. Thank you all for being here. And for those of you in the United States, it is supposed to be a holiday weekend, but I did promise you I'm here every day anyway, 7 days a week. Christmas Day, New Year's Eve, you name it. So thank you all for coming. Today I'm going to start with kind of everything that happened this week. And there's a lot of news to cover. This used to be a segment called a Quickie on Saturday mornings, but now it's become much more of a long one because there's simply too much news to share. And thank you all for being here. Let's go and now hold on, figure that. Yep. Okay, we're good to go. And of course, this is edutainment, never financial advice. As investing KO would say, we help you navigate the matrix. And of course, there is nowhere on the internet that you will find as much information at all as this channel. So please subscribe. And we have had a little bit of an issue lately with scammers. Huge uptick in scammers. We work 24/7. We pay for services to delete them all from the channel. But, it might be a reflection of the state of the actual bull market right now that the scammers are out in force. So be careful, everybody. Lock your security down. We'll talk about that later. And this story today, we're going to talk about a lot of stuff. 4% being the new 2%. ESG is dead. Ton of crypto stuff, including one final confirmation that we are in a bull market that will leave no doubt in your minds, and a ton of other data. We'll also break into a whole bunch of positions and bags and threats to certain altcoins in the future. We'll talk about the Tesla EV and what it could mean for the stock price and stock market history, going back into 100 years of history to give you a feel for where we are right now. So with that, let's talk about Bitcoin scarcity, part 7. I talk a lot about Bitcoin scarcity because it's fascinating to me. Arthur, I cannot. It's not good. So let's talk about Bitcoin scarcity dynamics, part 7. Now here you can see this beautiful chart from the Rational Root. Got to get him on the show one day. It basically puts together the best stuff. But if you look at HODL behavior and how they measure it, and HODL behavior, by the way, is measured through the age of coins, with coins held longer being less likely to be spent unless there is a significant price rise. Now, I forgot to add arrows to the chart, but if you look at the black line at the bottom, you will see the big dips in the long-term holder supply, okay? So what they do is they stack, and then when the price goes parabolic, they dump. And then they stack. Price goes parabolic, they dump. And I'm going through each little dip here in this chart. Then they stack, dump. And they've been stacking for the longest time. What's also cool is that teal line, the illiquid supply. Here you can see this is growing as well. Okay, this is to classify entities based on their spending behavior, with entities holding over 75% of the Bitcoin they receive is considered illiquid. So sometimes, even if these long-term holders do stack, they only ever sell a quarter of what they have. Interesting. Now, this third halving is going to be critical. This fourth halving is going to be critical because we see a big change here where a liquid supply is growing at an increasing pace and the circulating supply is flattening out. This suggests that illiquid supply dynamics are surpassing new supply issuance. And that's the scarcity story that we love about Bitcoin. So let's look at it another way too. Let's look at where we are right now from Swissblock. This is kind of Bitcoin's price in context. And basically what you can see from this chart here is the price is solidifying at about $30,500. We are exactly at 30,600 now, and it's in that very tight range. So I always talk about Bitcoin. It kind of goes up in steps and stabilizes, then goes up in another step, stabilizes, etc. But for those of you who have your sniping rifles out, and according to this, and I kind of agree with this analysis, if there is a retracement, it could be to 28K. But the days of having that beautiful $25,000 buy opportunity 2 weeks ago, it doesn't look like it could happen again. Again, there's too much out there. And despite all the negativity in the market, this tells you exactly what's going on. Pancake Panda, thank you so much. Let's look at another view of scarcity. And this is a great visual, again, of HODL, which is the amount that's held, the illiquid supply, which is growing up, the little black line with the blue text beside it, and the total supply flattening out. Okay, Remember, the 19.3 million of the 21 million have entered circulation over the last 14 years, ladies and gentlemen. I'll repeat that again. 19.3 million of the 21 million have hit the market in the last 14 years. The next 1.6 million will enter circulation over the next 115 years, okay? 115 years. And Bitcoin is becoming scarcer and scarcer. And that is the fascinating thing. Right now, total score of illiquid Bitcoin is 15.2 million of them. A lot of people will not let go unless the price goes way up. They're not interested in 35K or 50K or 65K or 75K. They want a lot more. So it's going to be a fun time to watch as we go forward. In addition, what happened over the last couple of days too, this is a very good chart from Glassnode, and it shows you exactly the net transfer volume from and to exchanges by breakdown by size. And what you can see here, the bigger cohorts have the larger colors, like more than $10 million in red. The dark orange, which is $1 to $10 million. And you can see every time there's a little wick down, guess who comes in and buys? These are the vultures. These are the big boys. They are scooping it up. And this is very interesting. In fact, this even happened yesterday with that, or yeah, it was, all my days are confused. I don't know if it was Friday morning or Thursday morning when it hit the market, I think you said that, oh my God, BlackRock, their ETF approval was not approved, etc., or their application was not approved, wasn't good enough. Of course, the market freaked out. And who comes in and buys? Well, the big guys. And the retail get liquidated. And that is the problem. In fact, there was 200 million of inflows, which is one of the biggest this year. And that was when Bitcoin fell under that 30K for a few minutes. It was funny. I was chatting live when I saw it happening. I said, okay, time to snipe. This is going to bounce right back. And literally, boom, minutes later, it was shot right up. So just don't get shaken out is what we're trying to say. It's still early days. Now, very important chart. This is final confirmation of the Bitcoin bull run from Blockware Solutions. And since, obviously, June 2022, the aggregate cost basis of the market, okay, that's what they call the realized price. The green line here, if you could focus on, has been less than the aggregate cost basis of the long-term holders. The long-term holder realized price, the red line. And the beauty of this is we are about to see the final confirmation that we are in a bull. And that is the bullish cross. That is in which the long-term holder realized price drops back below the realized price. And this historically has been flawless. It is a lagging indicator, but it signals the end of the bear and the final confirmation, if you will. So here we are. And you can go back in history and confirm for yourself what you're looking for is that green line popping above the red line. And that's all she wrote. And this stuff really, really works. It's like the pi cycle indicator and stuff like that. It's mad how accurate it is. So let's jump in and let's talk about Bitcoin versus S&P 500 correlation. Now, for those of you, I heard a little bit of grief yesterday that people complaining, oh, S&P is doing better than Bitcoin. Bitcoin dead. It's like, okay, let's take a step back for a second. This is Bitcoin versus the S&P 500, and you can see, yes, blue is the S&P 500, and yes, it has been outperforming Bitcoin over the last couple of months. But that is all about to change. In fact, having this break in correlation is a good thing. And also, the stock market has been on a tear due to the whole AI revolution. So we won't beat that to death. But again, not for long. So when Bitcoin kind of gets its legs running, circling, it goes a lot higher than the S&P 500. Remember, over time, if you are invested only in the S&P 500, you are treading water. Okay, your purchasing power is remaining the same. Stock market might go up 14% per year, but that's pretty much what you're losing in dollar debasement anyway. So just bear that in mind. So you need something that goes faster than the S&P 500. And speaking of that, a lot of other talk about gold. This is a very telling thing. Again, a lot of people are annoyed that Bitcoin is not on the moon already. Are they too late? Is it dead as an asset class? And people, I must say, in this modern era, are quite impatient, and don't take offense to that, but everybody wants their results instantaneously. But this is the Bitcoin performance since the 10th of August 2020, when MicroStrategy first adopted its Bitcoin strategy. Here we are, ladies and gentlemen. Bitcoin is down 6%. Gold is down 6%, and Bitcoin is up 160%. And remember, August 10th, 2020 is not that long ago, just under 3 years, and that is a staggering result. And we've been through a nasty bear market, but good things are ahead, that is for certain. In addition, let's talk about interesting dynamic yesterday. People freaked out, it was yesterday, about the BlackRock ETF application being, incomplete or not good enough or whatever else. I was like, oh no, all our hopium is gone. But what was interesting, despite the SEC's decision to delay the approval of Bitcoin ETF, we knew that anyway, they're going to be a pain in the butt. They're not on the side of crypto. They will approve 2x leverage futures ETFs in Bitcoin, but hell no, a spot is too risky, which makes no sense whatsoever. But here, you can see what did happen. Both assets dropped sharply. I want you to cast your eye on the blue line. That's Ethereum price and Bitcoin. They both dipped simultaneously, like they do always. But guess what rebounded faster? Ethereum. And guess what? That also dinged the Bitcoin dominance chart too, to a large extent. Remember, Ethereum recovered more sharply than Bitcoin and is now up about 1.6% higher than Bitcoin over the last 24 hours. And the reason for this, we're not sure, but there's a couple of things happening behind the scenes. One is there is a CME product coming out, and it's a Bitcoin Ethereum trading pair, which will be interesting to play with. In addition, a lot of people believe it could be driven by bots. When the Bitcoin ETH pair goes out of whack, it needs to be brought back in. So people will ditch their Bitcoin and move over to Ethereum, because the speed at which this happened was staggering. And when you look at the pairs, it was very telling as well. So watch this space carefully. It's very good as well. I think it's probably only a matter of time before Ethereum breaks $2,000 as we go forward. So let's talk about in some BS news. And this is disappointing from Cointelegraph. And, I don't believe anything I read on mainstream media, but sometimes the crypto rags can be quite good, like CoinDesk has been doing a great job lately. But Cointelegraph from William Suberg, if you're out there, check your math. Bitcoin price has never lost more than 10% in July. Is 2023 different? And the reason I know this was immediately a fake headline was because I made a video about this yesterday. And it was my forecast for, I'll add the video here later, for the second half of this year based on history. That's all, just history. But here you can see clearly from my table that Bitcoin did lose 17% in July 2011. That's that little red little box up top in the middle of this sheet. So the average performance for July, though, is good. Average monthly return for July over the Bitcoin history is 8.34%. In fact, the last 3 years, it's been bonkers good. And we've also had that historic kind of 5 of 6 months positive in the first time in history, not for the first time, for the fourth time in history. And that only happened in 2011, 2017, and 2019. And here we are again. Typically, when that does happen, as I analyzed yesterday, the results are very good. Now, the good news is maybe our friends at Cointelegraph didn't go back far enough in history. Some people as well. So look at charts. And I look at a chart of, say, an exchange listing a coin, but they don't go back to the beginning of when the coin actually existed, so they don't have the full history. Maybe this is the case with Cointelegraph as well. So, again, fake headline. Yes, it has happened before, but overall, July is a good month. Who knows? We'll see. We are up fractionally so far. Now, speaking of other news, a lot of people are concerned about this. A lot of people are concerned about things like Robinhood selling their altcoins. We saw that it had very little impact at all. In fact, some altcoins that they were selling went up a lot, like 20% during the time that they're supposed to be selling. But Wu Blockchain came out and said Celsius is now court order permitted to sell any non-Bitcoin or ETH holdings that they hold. So I went in and dug into exactly what they do hold and checked all of this, because a lot of people are concerned that this could bring about a lot of sell pressure. So I ran some numbers, and here they are. And yes, just for the people out there, I did have Alex on the channel 3 times in my life, but every other YouTuber had him on hundreds of times for years and years and years. And somehow it was just a terrible situation. And the good news is they do have crypto that is off the bottom. So when they do sell this, it's a lot better than if they sold it a long time ago for cash. And hopefully they'll convert it into things like Bitcoin, ETH as they go forward and not hold cash. But anyway, these are the actual holdings and ratios. So first of all, they have about $244 million in holdings, in altcoin holdings. This is not including their Bitcoin and Ethereum. And you see the biggest position that makes up 28.91% is the Cell token holdings, worth about 70 million. Their second biggest position is Matic, making up 21.25%. $52 million worth. Third is Stellar XLM, 36 million. That was a surprise to me. Fourth, Cardano, 26 million. Fifth, Link, 17 million. Sixth, Litecoin, 14 million. Litecoin's been on fire lately, which is good for that. Even Bitcoin Cash has been on fire too, but they only have $5.5 million of that. Polkadot, $7.8 million. Aave, 5.2. Uniswap, 4.4. Solana, only $2 million. And in full disclosure, mine is on there too. Never took a penny off. And hopefully, well, we'll see what happens. But the key point of this, then you got EOS, FTT, and Serum, is really small crumbs. What I did as well was I took the percentage that they hold as a percentage of both market cap and fully diluted market cap. You can see that table on the right. And I looked at the 24-hour daily volume of these assets too. So there will be a hell of a problem if they try and sell the Celsius token all at once. Because not only do their holdings exceed the actual market cap of the tokens in circulation, but it makes up about 66% of the total amount of Cell tokens that they have. And if they were to dump them all, that would be about 1,500% of the total volume. Thank you, Mr. Mike. See you out there. The next in the box that would make up a big chunk of daily volume, Matic, about 12.86. So it could easily consume that if that Matic was sold. Stellar, 23% of daily volume. And again, very small amount of fully diluted market cap. It's just really insignificant. Cardano, 6.5% of daily volume. Chainlink, 4% daily volume. Polkadot, 3% of daily volume. And if you look at Solana, 0.2% of daily volume. So it is a complete nothing burger. So if you're worried about them dumping and bringing the prices down, not a concern. But if you're holding Cell token, be concerned, because that is nothing. Now, speaking of Solana, Firedancer totally was on a video this week, and he said that Firedancer will be up by year end, and potentially when that happens, when they have a completely different platform that's written in an entirely different code base, which can have no gremlins in it from the other code base of the existing Solana today, that means they'll have full redundancy. And no bug can be replicated in the new platform. And he believes that once this happens, completely different team building this, setting it all up, it will bring about a lot more reliability to the actual platform and scalability, and potentially Solana will come out of beta. So that's a very exciting news, again, for year end this year. That could be a big boost to the price and also help the next year. Now let's talk about a bit of stock market history here. Hat tip to Brent on Twitter for this beautiful, simple, yet powerful market perspective. It is basically the up and down years of the stock market over the last 100 years. And this chart provides a visual summary of US equities. Now it shows you the number of consecutive years up or years up. They are the green bars. And the black is the down years for the S&P 500. So what I did is just back of the napkin calculations. If you calculate the amount of consecutive down years, there were some ugly times back in 1929 to 1938, but that was also a different time during the Great Depression. So you can kind of discount that a lot. And also, if you look at consecutive up years, we had that 1989 thing, 8 years up in a row. 99, it was 5 years up in a row. 2007, 5 years up in a row. And here we are. We have a lot of 3 years up in a row. It seems to be the most common appearance. We had a bad year last year. And as I said at the beginning of the year, once you have a bad year, the next year is always positive if history repeats. Now, the other interesting thing is if you ignore the Great Depression, just over a quarter are down years. Okay, a lot of people say that, oh, stock market is going to be flat for the next decade or go down. Well, that just doesn't happen, okay? That's just history. So I just want to give some people confidence. We could be in the middle of it is a bull run, asking anybody, mathematically, statistically, etc. But this means we could have 3 years of run ahead of us, all spawned by the AI revolution. And the AI is not like the .com. Very different. .com was fake hype. AI is truly real and implementable, back since November 2022. Speaking of a little bit of Tesla news as well, a little bit of news that went under the radar, not all the usual stuff. I try to pull out the nuggets that people kind of ignore to make sure you guys have it. But Elon Musk did come out this week and he said scale production for the Tesla Semi would hit in 2024 with about 50,000 units per year. Now, these things cost about $300,000 each. I'm just doing some back of the napkin math in my head. All right, let me. I hope I'm not biting off more than I can chew. So, if the semi trucks are 300,000 each, they do 50,000 of them. That's what 15 billion in revenue, and that would be about 3.75 billion in profit, or about $12 in earnings per share. Multiply by that by 40 as a PE. Just the Tesla Semi alone could justify the stock price today. Again, just back of the napkin math here in my head. I've run models on the Tesla Semi before, and we should talk about it again. But what's really interesting is this article. Big thank you to Sanjay for sharing from Bloomberg today. Heavy trucks turn electric. It's like, huh? Well, from Bloomberg, they looked at data out to 2030, and it does not sound like a lot. But up to between 17 and 20% of trucks, heavy-duty trucks, semi-trucks, whatever you call them, wherever you are in the world, that carry cargo for like 500 miles, will be battery-operated. There are companies building them already. Daimler, MAN, all the, Volvo, they're building all these trucks. But this could be a huge, huge market. And imagine, truck plus FSD, mind-blowing. Now, to look at some truckonomics as well, just to show you how possible this is. This isn't a figment of my imagination. These are the EV truckonomics. Recharging was always one of the best questions. And guess who has what's called a mega charger for trucks? Tesla. Guess which every other car company in the world is moving to the standard of? Tesla. It's going to be a no-brainer. If you run a fleet, and remember, trucks typically run for about 10 years, and it takes time for them to kind of start replacing old trucks with new EV ones. But guess who'll have all the charging infrastructure? Tesla. If you're running an enterprise that's dependent on logistics, who are you going to pick? Tesla. There was a little bit of concern though about ramping these things up, and Elon Musk did allude to it. They're not ramping them today because they don't have enough batteries. But by year-end 2024, they will. But this is cool. This is from, let me see, I think it was, again, Bloomberg. Here, you can see the different versions of trucks. You got your diesels, natural gas, BEVs, and FCVs. Cast your eyes on the teal color. Again, US, China, Germany. Germany is already way ahead in electric vehicle trucking. And the cost parity is getting there. It's still a little bit more expensive than the natural gas trucks, but that's all going to change real soon. Again, batteries are getting better, trucks are getting better. The effectiveness and efficiency of the Tesla Semi is second to none. In other news regarding stocks as well, Apple hits 3 trillion. In a joke, I always say that billions are the new trillions, and no, let me get this right. Billions are the new millions, and trillions are the new billions. Yes, I hope I got that right. But here you can see a company now hit $3 trillion. First most valuable stock in 2011 when its market cap was under 340 billion, and it comprised about 3% of the S&P 500, I think. And since then, it is first company to reach $1 trillion in mid-2018, achieved $2 trillion in August 2020, making it the first US company. I think Saudi Aramco was $2 trillion overall. And here we are, $3 trillion. And there's going to be tons and tons. We have NVIDIA as well becoming a $1 trillion company. Again, tons of $1 trillion companies are coming our way, and no ifs, ands, or buts. Now, let's talk about a bit of bad news. This is some interesting release that was out this week, and that was the fat cats are getting fatter like in the 1920s. This is the share of total before tax income flowing to the highest income households. And you can see here, nearly 25% of all income goes to the top 1% of households. And we are back at levels of the 1920s. If you go to the top 0.5%, it's about 18% of all income. Again, back to the 1920s. Why? What is a fat cat for you who are all not as old as me? This is what the 1920s fat cats were. This was when there was a lot of inequality, both income and wealth inequality. Was all about capitalism. All the money was held by the few, etc., etc. Some economists also blamed the current increase in fat cats because of decline in manufacturing in the United States. And also, more people are being pushed into lower paying service jobs. And this has widened the gap between the rich and the poor. And this could result in a little bit of domestic strife as we go down the line, which was one of the forecasts. So this is not good. But anyway, that's the fat cats. They're back. In addition, let's look at one of the other problems that we see in the world is cumulative inflation from 1913 to 2022. And you can see it's up and to the right. It hasn't gone quite exponential yet, but trust me, it's coming. Now, let's say you had what this means in simple terms. Let's say you had $100 in 1913, and with the cumulative inflation rate of 2,923%, you basically would have $3 today. Okay, so you're losing 97% of your money. But now it's even more extreme because of that curve. That's just because the first 50, 60 years, things were kind of okay, not too bad. Now it's into money printing, high gear, huge deficits, etc. Half-life of money is 10.4 years. Soon it's going to be like 8 years, then 5 years. And that means if you have $1,000 today, in 10 years, you will have about $460. But it's going to be worse than that because of the money printing is going into high gear. In addition, per the Financial Times, I want to give a shout out to this fellow, Andy Haldane. He wrote this brilliant article. And again, thank you to Sandy for sharing. But I read it, and the UK is facing a high inflation rate. Now, we all know that. Everybody is facing that. But the problem is the government is saying, hey, get used to staying poor, all that type of crap. Same thing. They don't quite say it the same way in the US, but it's basically what's happening, as I just showed with the fat cats. But the problem, I think, what this article is really trying to stress is it's extremely difficult to get down to 2% inflation. You have to really smash the economy, destroy jobs, etc., smash people. And there's been a lot of talk for a long time that, the Fed would move their target from 2% to 3%. Again, if you ask anybody in the last 40 years, real inflation has never been under 5%. But here we are. And this article says we should actually be 4%, that target for inflation. But just think about that for a second. It's already bizarre to me that humans accept 2% inflation. When it's 4%, and that's government numbers, it's really 8 or 10 or 12%. And that's how much is being taken out of your back pocket every year. And it's become a norm. It's become accepted. And this is why everybody believes we'll have that kind of subtle reset with CBDCs coming in to really force people how they can spend their money, play with their money, control their money, and how they can better control money supply and inflation and everything else. Scary times indeed. A little bit of good news. New single-family homes shot up in the United States. Again, springtime, as I always say, people build their nests in spring, so this is where we are. We'll see if it'll hold right now, but that is good news. In addition, another piece of good news, Larry Fink came out. ESG is dead. He didn't say it exactly in those words, but he did say ESG, which is the environmental, social governance, the thing that puts things like Philip Morris tobacco companies to the top of the list of being the most ESG proper companies. And it was being politically weaponized. And Larry came out and said he's ashamed to be part of the debate on the issue, which is stunning. BlackRock created ESG, and now he's ashamed to be a part of it. It's kind of bizarre how it all turned out. And guess who was right from the very beginning? Elon Musk said ESG is BS. Speaking of other news this week, the Supreme Court came out and had a lot of interesting rulings. I'm not going to get political. I'm just going to summarize in 3 sentences. You will be judged on your own merits, which I think is fair. I don't believe in any type of discrimination. You will be responsible for your own debts. That is, the student loan forgiveness was kind of denied. And you cannot force others to assume your own beliefs. All of those seem pretty logical to me, but to some people they didn't like what the Supreme Court did this week. But again, I'm not going to get involved in that. And yes, I did mention at the very beginning, be careful of scammers. They have really gone into high gear. They're coming for your bags. If people are still doing this, and it makes me bizarre, there is no such thing as a free lunch. Don't say, hey, give me a Bitcoin, I'll give you 2 back. It's not going to happen. They're all scammers. Intelligent people are getting scammed, and I don't know what the mental block is. Do not give anything to anybody. Assume everything is a scam. Like Rob says, now this is what's happened so far in the first half of this year, 2023. Total losses from hacks, phishing scams, rug pulls, Web3, etc. reached $656 million. That's 2/3 of $1 billion was taken out of people's pockets. 108 hacks, phishing scams, rug pulls, etc. You can see the detail here. Lock your security down. We spend a lot of time on that, everybody. Just literally takes a lifetime to build wealth, second to lose it. Everybody is out for you. Lock your stuff down. I'll add my security playlist here. Check it out. It's worth it. It's like, imagine you being your own bank. Imagine having a Bitcoin in your house, okay? And Bitcoin goes up in value, and you just leave things lying around. It's just start thinking of you as your own bank, okay? Think bars on the windows and armed guards and stuff like that. Maybe not that extreme. Anyway, you get the message. So don't trust anybody. And by the way, one other thing, I will never reach out to you. You know, people say, oh, you sent me a message on Instagram, or what's the other one? Telegram. I'm not on Telegram. I'm not on Instagram. There is a profile there, but it's just a placeholder. I won't reach out to you on Twitter or any channel. Not on the Discord or a Telegram or anything else. I don't have the time, and I'll never ask you for anything. So if anybody reaches out to you, they are a scammer. Period. Remember that, everybody. Very important. And they're coming. Also, final piece of news today. Stay healthy, my friends. I always say health is wealth. Dropping a lot of my anecdotal stuff today. But this just came out from a study published on Zero Hedge. Check it out. Xanax, Valium can cause brain injury and suicide. So if you or loved ones are using any of these things, find another escape or avenue. But be careful. Drugs are bad. Big Pharma is not on your side. Okay? So with that, a lot of heavy stuff today for a Saturday morning. My time, but thank you so much for being here. Thank you to the mods in the chat, and I'll see you all tomorrow. Big Q&A tomorrow as well. Lots of really, really clever questions. It's so big that I started working on it yesterday. So thank you all, and hit the like on the way out. Much appreciated, and subscribe if you want more of this stuff. Bye.